Nigeria's struggling economy has sparked concerns among investors as the country's recent interest rate increase and treatment of investors in high-profile projects raises red flags. Yesterday, the Central Bank of Nigeria, CBN, announced that it has yet again raised the monetary policy rate, which measures interest rates by 50 basis points from 26.25% to 26.75%.
Now, this development comes as experts worry that recent spat between the Nigerian Midstream and Downstream Petroleum Authority and the management of Dangote Refinery will deter investors. Now, this incident has raised concerns about Nigeria's investment climate and the government's commitment to protecting investors' interests as well. Now, as the country navigates economic challenges, including a growing debt burden and currency fluctuations, investors are becoming increasingly cautious.
Absolutely. Now, joining us to discuss this is political analyst and economist Gbolahan Olojide. Good morning and thanks for joining us.
Yeah, good morning. Nice to be on the program.
Good morning, Gbolahan. So I'm just very quickly going to ask you about the whole Dangote Refinery thing and, of course, his, would I say, clapback now to the accusation of monotony. What do you make of that?
Well, the monopoly story doesn't hold unless they are telling us that we should not expect any later of PMS from those government refineries. If government asks for refineries with capacity for 445,000 barrels per day, and we have been told that mechanical completion has been achieved in a couple of those refineries, contracts have been awarded for the other ones. So if they're going to be producing that much, why are we talking about monopoly? That is apart from the fact that we have Arada, we have Walter Smith. So there are other private refineries. They might not be of the kind of scale of Dangote's refinery, but they are there all the same. And the one for the government is huge. It's about 70% or thereabout of the capacity of Dangote Refinery. So it may not be, at least it is technically wrong anyway to say we have a monopoly in that space, unless the message is those government refineries will not work. If that is the message, then we probably have close to a monopoly.
Okay. We're also going to discuss the monetary policy ratio in a bit, but still on the refinery challenge, there's the growing concern that this current administration is not very, very welcoming to investors. And those who they expect to invest, or bring in foreign direct investment into Nigeria might shy away because of the way that, things have been, affairs have been run in the last 1 year. Does anybody who have that view have a point? And would you agree that, seeing what is currently going on and the drama with the Dangote Refinery, it's one thing that might scare investors away from Nigeria?
Yes, I agree with you on the way the Dangote Refinery matter has played out. I think it was improperly handled. Things like that with major economic impact should not be thrown into onto the streets of politics and deal cutting in the media. It did not present us very well. I'm happy though that it seems as if attempts have been made to recover that sleep, that major sleep by the government. Coming to the media saying all those things were improper. So there have been subsequent meetings. I think they might eventually come to an agreement and be able to move forward. However, the problem with what played out was, look, we are going out there asking people to bring their money to come and invest in our economy. And they are seeing someone who is already making that investment, huge investment. We're talking of 20 billion US dollars. How he's being treated, my people will say the man who steps on his own clothes can tear your own. So if somebody is smashing his own clothes, he obviously can tear your own. That would be the perspective of somebody who is looking from the outside and want to bring its own money into the Nigerian economy. So we should avoid as much as possible situations such as the way Dangote matter played out in the media. On the positive side, however, the government has tried some things. There was the presidential committee that worked on harmonization of taxation, which I believe did a very good job. We have all these 1,001 taxes that are there, and we must be able to streamline those things, give an element of convenience to taxpayers and predictability to investors.
All right. In Dangote's, would I say complaint now, he also raised a very salient issue when he eventually said that, he was going to, the whole steel investment plan has been put to a halt because especially of the, poor policies that Nigeria has, and of course the accusation as well. What do we make of that, especially talking about the unfavorable policies? We have, like you said, looking from the outside angle, a lot of foreigners are saying so many things that are not working in our favor as Nigerians. Do you think that Dangote's refusal to continue with the steel investment is something that we need to be concerned about?
He played it nicely. It was a nice bargaining chip. I believe statements such as that, which portrays us in a very negative light to the international community or investors who might want to come into the country, also created a jolt, which is part of why government will want to sit down and resolve that issue, and also use it as a basis for ensuring that similar things will not happen in the future. I believe that government can still sit down with Mr. Dangote and have a discussion around the proposed steel investment and a very firm contract. There have been issues around whether supply of crude was properly tidied, under the Dangote Refinery contract. So there are lessons from that for a steel investment. A very tight contract that, ensures that none of the parties can just wake up and behave in an unpredictable manner.
Yeah. All right. Now let's talk about some other recent events. The monetary policy rate, I beg your pardon, MPR, has been increased by 50 basis points. What does this mean to the average Nigerian? And of course, is this a reflection of where we are? Is this also a knee-jerk reaction that the CBN governor has once again taken?
Okay, I'll start from where you stopped. It is not a knee-jerk reaction. The very best that could have been done would have been to hold the rate as it were. But then, don't forget that minimum wage law has been passed. Salaries, minimum wage has gone up from 30 to 70. So there's going to be consequential pressure on inflation by virtue of what we have recently done. So on the side of the monetary guy, what he's trying to do is to at least ensure that the little gains, very tiny gains that have been made over the past few months will not get lost by dropping rates. So he cannot afford to drop rates right now. At the very best, he will have hold it firm, but I don't even think holding it firm might work in view of the minimum wage that I just mentioned. So what we need to be able to do is for the fiscal side to support, to find a robust way to support all this initiative so that we can get to an inflection point on our inflation fast enough. What has been established is that monetary policy in our own peculiar environment is not enough to drive that inflation in the right direction that we would love to see. Even if it's going to drive it, the gain will be so tiny and will take so long a time before we can begin to see what we expect. So the fiscal side of things has to pitch in a more robust manner to support what is going on the financial side.
You know, some have argued that the whole monetary policy thing is either beneficial to new investors or not beneficial to old investors. But at the end of the day, you know, the general song that is being sang is that it doesn't help inflation in any way. So I would have asked if this was a temporary solution, but is it even a solution at all? And what would have been best? I know that you mentioned it would have been best to just hold the rate as it was, but at this point, where do we go?
Well, if you see, inflation has been going up month on month, if you look at it. But one thing that is very difficult, I mean, that's very easy to miss, is that the rate of increase, for example, over the last 4 months, the rate of increase has been declining. So it is possible for a CBN to say, look, those tiny gains, the fact that it is increasing, but it is increasing at a decreasing rate, is something that I want to sustain. However, the breakdown of the inflation numbers shows certain things that are not responding at all to the monetary policy. One of it is the food. The food thing is not responding to, and it is the biggest factor. It's not responding to this monetary thing. Don't also forget that Nigeria still has a huge chunk of its money not within the financial system. So when you make those policies, they become more effective when you have a lot of your money in circulation within the financial system. Where in economies like ours, where we have a lot of money in circulation outside of the financial system, those monetary policies do not exert the level of pressure and effectiveness that we could have expected them to do. Which is why in my earlier comment, I was saying, look, while there might be some tiny things, inflation is increasing at a decreasing rate. If we want to really get there faster, a lot would need to happen at the fiscal side of it. Otherwise, we stifle businesses, people cannot get money to do business, disposable income is getting lower, they cannot consume, and all those things are there. We will not be able to get to the destination in good time, relying just on monetary policy.
Yeah, not very, positive outlook, from what we see, but we, of course, continue to hope that Nnaemeka Obiaraeri and, of course, Wale Edun, know what they are doing and are leading Nigeria in the right direction. Bola Olojide, thank you very much for your time this morning. We appreciate you for stopping by and for sharing your views with us.
Yeah, thanks for having me.